The stock market has continued to confound the doom merchant expectations for a crash, collapse or final top, heralding a new bear market that is always deemed as being imminent, which for some has been imminent for 6 years duration of this stock's bull market that just keeps defying gravity by relentlessly grinding each new proclaimed bear market into dust every couple of months or so, as illustrated by the latest new Dow closing all-time high of 18,298, which marginally beats its early March record high of 18,288. In terms for the prospects for the stock market for 2015, I turn to my in-depth analysis of 3rd of February that concluded in a detailed trend forecast expectations for a volatile trading range for the first half of the year. That in the first instance targeted a new all-time high before the end of March, which was achieved early March, followed by a volatile trend to culminate in a mid-June low before the Dow resumes its bull market trend to a series of new all-time highs into the end of the year, targeting a high of 20k. Having reached the final destination of this analysis, my forecast conclusion is for the Dow to spend the first half of 2015 in a wide volatile trading range that will set the scene for a bull run to have started by early August that continues into the end of the year, punctuated by an October correction low. I further expect the Dow to be trading well above 19,000 during December and probably spike above 19,500 before closing at around Dow 19,150 for a 7.5% gain on the year. The bottom line is, don't be frightened by first half weakness. And my last analysis of 20th April forecast that the Dow would target a trend towards new all-time highs by mid-May, which has subsequently transpired. For what to expect to happen next, then briefly and relying on my original analysis of 3rd of February, and whilst the Dow has made a new all-time high that has confounded the expectations of many market participants, instead I just see this as being the weak half of the year, with the Dow now just a month or so away from entering the stronger trend period of the year, that I expect to see the Dow propelled towards 20k, which means those who have now become conditioned to expect a continuation of a trading range are going to get very badly burned as the Dow relentlessly starts to grind ever higher in its supposed death-defying anti-gravity act. Therefore, despite the stock market being due a significant correction, for which it has a month or so to get out of the way, however, stock market corrections are just that, corrections, that should be viewed as buying opportunities and not the start of bear markets, as the fear mongers keep proclaiming, that tend to reach their loudest right at the bottom of every correction that thus far has always resolved in a trend to new all-time highs. Now, this brief update will be followed by a series of in-depth analysis on stocks, housing, gold, dollar and other financial markets. So ensure you're subscribed to this YouTube channel to be notified of.